folks, here we go. Another earnings report we're talking about today. We love it. We're talking about AMC. This is a company that actually popped when you're talking about the actual intraday trading. 8% up without really any, news there. Just kind of a result of expectations for earnings, I suppose. Then after earnings, you see in the after hours down 4.5%. We're going to dig into this earnings report and see what's going on. Obviously, this is a stock that's been as a company, incredibly impacted by by last year. I mean, it completely shut down their business for several months. I mean, and they're still really facing that impact. And if you look year to date, the thing's up 2,000%, obviously quite incredible. This is mainly due to a boom because it became one of the meme stocks. Everyone was looking at it. Still in the last 5 years, up 30%, but obviously prior to the memetry, this stock was down 94% in a span of 2016 to 2021. So this is obviously one that's still pretty volatile where it's at right now, and I think you can see that in this movement today, 8% in the middle of the day, and then 4.5% after hours. Let's look at these earnings, though, and see what could be driving it. GAAP EPS of negative 44 cents, beats by 10 cents. And a revenue line is up 538% year over year, which is pretty nice. $763 million. It's a beat by $30 million right around there. So, what do you think about this? Well, one thing I need to point out right here is this line is very concerning to me. The fact that this company is still one that is putting up a negative EPS line, and not a small one, a large negative EPS line still. It's large. This is a lot of net loss here. And especially for the fact that all of their theaters are running, right? Every one of them's up and running again. Obviously, they're going to have issues in terms of staffing, so that, payroll shouldn't be an issue as far as expenses are concerned. I don't know, and cleaning efforts aren't going to be quite what they were last year when they had to reopen. I just don't necessarily see why it's possible that they're still posting a pretty big net loss. I mean, I'd like to see that's really recovered. How long is this going to take before we see actually any net income on this company again? That's where the concern comes in. So the revenue line obviously in good shape, but there's still concerns with the industry of movie theaters as a whole, which is kind of surprising. I think a lot of people may have expected a little bit of a quicker recovery, but we've still seen pretty weak, even with great movies coming out, massive movies from Disney and onward. I mean, these are big releases, not getting near what they were getting if you're looking at the 2019 numbers, not getting near the opening weekends. And again, part of that comes to the fact that they are offering streaming options typically concurrently. So that's part of it. But still, demand in theaters is not quite where it was. So the question becomes, with streaming, every movie basically is going to be streaming alongside it. They may go back to only in theaters, but again, there's a lot more profit when you talk about the streaming aspect of it. A lot more profit if you add a premium to it, so you don't have to pay the theater really. So think about that as an option potentially. So I just, mine thing's the net income line. Admissions revenue, top the consensus, came in at 425 compared to 417 expected. So they did beat in terms of actual ticket sales, which is good to see in that aspect. So as of September 30th, 100% of the domestic theaters and 99% of international theaters were open for business. Good for them. So let's look at the press release, see if we can find out some better stuff potentially. Let's see what we can find. Obviously, financial results, we like looking at charts. We love it. From a revenue standpoint, obviously, it's not even fair to compare year over year. This is a time in which they didn't have any business at all. It is fair to look more at a 9 months ending standpoint, and the fact that they're really up only 25% on a 9 months ending standpoint, personally, I think that should be a lot bigger. I mean, we're talking about a completely shut down business, and this year, fully operational. So the fact that the 9 months numbers are only a 25% growth, it's a little concerning, in my opinion. I mean, I'd like to see better numbers, and it just goes to show that the growth is slowing there. It's not quite growing as fast as you might have anticipated. The recovery's not there yet, and the net loss is one that obviously is concerning to me. $224 million in net loss still. I don't know how this company is able to afford losing all that money. But there's progress. I mean, there's big growth there. It was $905 million in 2020, so they've obviously reduced that by a massive margin, but I don't know how it's not quite in the positive yet. And on a 9 months ending standpoint, they're about a little bit better than 1/3 of what they did in terms of net loss. They've lost $1 billion in the last 9 months, which is crazy. And the year before that, $3.5 billion. I mean, that's wild. I don't know how this company was able to survive losing that much money. I know I couldn't survive losing that much money. Maybe they talk to Uber, who loses billions of dollars every single quarter. Yeah, I mean, nothing's exceptional there. As far as attendance numbers, this is where I kind of get into the point of, obviously we're not seeing the amount of robust growth that might have been expected. The recovery isn't there. Attendance only increased 2%. International down 28.8. Okay, you'd like to see a bit better there. U.S. did grow 21, but the international number down pretty significantly. Obviously, the U.S. is more important. A lot more attendance there in the U.S., but international screenings there for them not quite exciting, all things considered. Let's look at this balance sheet on this company. See what this last year has done to it. Obviously, should see some recovery, at least slightly. In my opinion, just due to the fact that I think I skipped over it. No way. I promise you, I don't skip over things. Ooh, food and beverage revenue. Let's look at this. You love to look at it, okay? Food and beverage revenue. Look at that. Look at those numbers here. I don't know. Worth looking at. Fun stuff. Oh no, you're not hiding from me. You're hiding from me? I probably scrolled right over it. That's my apology there, but we like to look at the food and beverage revenue. It's kind of just, it's what we did. Don't like looking at that net loss line. Let's stop that right away. Well, that's that's right. It's one of these. It's one of these companies. Look at this. It's not going to show me the liabilities. They don't have the cojones to show me it. They don't have them. They don't have it. But they have a way to do it. I mean, shareholder deficit. That's right. At least they're having the cojones to show this number. Shareholder deficit looking pretty bad here. Has shown some good recovery, $1.6 billion compared to $2.8. So again, the balance sheet showing recovery. Still not a good balance sheet by any means. It's a company that got absolutely destroyed last year. Trading in a market cap of $23 billion is very high for this company. Let's just be clear. This year, the company, if they're lucky, brings in $2.5 billion. Could bring in $2.5 billion. We'll see what this quarter looks like for them. Obviously, there's a couple big movies coming out. Which I don't think they will bring in that much money, but if they did, trading at 10 times that value, this is not a company that deserves that valuation, right? They don't deserve that valuation. Obviously, no PE ratio, and there won't be for a while, as we've seen from the data. They're not really growing as quickly as you'd like to see in terms of the net income line. They're not. I'd like to see it grow quicker. Look, AMC, this stock's, it's trash. It's a trash stock. It's not worth where it was at in the $2 range, but it's probably worth closer to where it was in the $10 range. This is not a great company, and the resurgence isn't quite coming, right? Not to be down, a bummer on movie theater stocks necessarily, but look, these aren't companies that I think are worth holding. These aren't long-term investments. They're just not it. That's what I got for you. You can disagree. Let me know if you disagree and you like AMC here. I don't like it. I'm getting out of this one.